All right. Good morning. Good morning, Jim, Daniel, David, Sophia. It might be a goof morning. You never know. It's Friday and I'm wound up, so you guys might be in a little bit of trouble today. Try and keep up with me. I've had some coffee. How's everyone doing today? It's Friday. We made it to the end of the week. Man, it's been a great week, hasn't it? A lot of great lessons. Couple slow days, couple amazing days. You live in trouble. I think we're neighbors. Good morning, Zeba. Great to see you. I'm excited. Good morning, Joel. Indu. I'm so excited. I woke up early today. I fell asleep early last night. I was up at 3:30 this morning, decided to watch the market, have a good time. Simulate a little bit at first, ended up trading live after, because that's what we do. Got to wake up, got to be in the right state of mind, right? Good morning, Sam. Good to see you. For those of you that don't know me, my name's Mark. I'm going to be teaching class today. I got to tell you guys, though, it's not a lecture. For those of you that are new to the class, this is not a lecture. This class, I really depend on you guys posting pictures, asking questions. Hey, Jonathan, my job security is dependent on your participation. That may not be 100% true, but it sounds good, doesn't it? Yeah, David B., I do too. I like my little morning time before my wife wakes up. I'm usually up about an hour before her. Just, she works hard. I don't. I sit here and flap my gums into a microphone and help you guys read indicators. Guys, I want to remind you that there's a path. And we're going to talk about the path all day, like a broken record, all day, every day, until you believe it, until you follow it. But the step-by-step path to becoming a confident trader is just posting your trades in class and tracking your real-time performance in a spreadsheet. If you do these two things, show of hands. Who's doing this right now? Who's posting everything they do in class? And who's tracking every one of those trades in a spreadsheet? Awesome. Those of you that are not, I know it feels like work, right? Making $1 million a year, believe it or not, is work. Learning indicators, learning a brand new profession. Guys, there's a little bit of work to it. Get the work done. I can tell you that I fought this path. I fought it tooth and nail in the beginning just because I'm so damn smart. If you've met me, you know this, right? Guys, when I went live after bucking the system, I lost about $4,000 or $5,000 over the course of 20 trades. 20 trades in 2 days. No winners. Had no idea why. All I knew is that my account was empty and I hated day trading. It gets emotional if you don't have a plan. It gets emotional if you don't put in the repetitions. So guys, that's what we're going to talk about today. We're going to talk about setting you up for success, putting you in the best position to get to where you want to be. And you're all here because you want to make money day trading the markets. But before we do it, what do, guys? Every morning, forexfactory.com. Hey, Terrence, good morning. Making sure that we're not jumping in front of those freight trains of emotion, right? Holy smokes. Yesterday it was kooky crazy. Today it's kind of mellow. We've got the leading index at 10. It's low impact. We want to know that it's happening. We're not worried about what they say. What I'm concerned about is knowing that there's news and that people may react emotionally. And I don't want to be in front of somebody making emotional decisions with millions of dollars that can move the market. So every morning I check news, right? And then I bring you guys over to the education page. For those of you not in the know, maybe you took a day off. Maybe you, I don't know. We're on 423 in crude. The contract is rolled. If you have NinjaTrader 8, it does it for you automatically. It gives you a heads up. If you are on NinjaTrader 7, you have two choices. You can either roll that contract yourself, or you can just go to the resources page and download the installers, and it'll get you everything that you need. So make sure that you're on the proper contract because the volume is different and it makes a difference. Let's talk about the user guide, NinjaTrader user guide. I like to hit this one a little bit harder when we go into the weekend, because I want you to practice on NinjaTrader over the weekend. I want you to practice opening and closing. I want you to practice building stops and targets. I want you to practice scaling charts. Guys, this weekend, I know it sounds silly. I want you to knock your charts completely out of whack. When I started watching the software, I'd open my charts and it looked just like this. And I'm like, well, what's going on? I have absolutely no idea where my charts are. And I would literally scroll just like this. And I'm like, where's the price? Where's it at? What's it doing? Guys, if you ever have a situation where you can't see your charts, click the white button up top, the white arrow. It's going to get you to the most current price. Click the capital F. It's going to bring you right back and put you where you need to be. So run through NinjaTrader. Make sure that you're comfortable with all the different things. If you're not sure, if you're like, well, how do I reset my simulator? Yesterday was 32 flavors of suck. Well, there's a section for that. How do I add those symbols and roll contracts? There's a section for that. Guys, almost any question that you could possibly ask can be found from the education page, whether it's the software user guide or where I get all my smart stuff right here in the tutorial section. And the tutorial section actually says building a foundation up top. Building a foundation in the tutorial section, making sure that you're creating a strong platform to grow from, that you're getting the basics, that you're comfortable with what you're looking at, and making sure that you're in a great position. Trying to think, Terrence, I think you're the only one that's posted pictures this morning. Joel, you've got some from last night, from wee hours of the morning. We're going to look at yours too, but guys, we're going to talk about rules before we do. So great time. If you don't need to talk about the rules, then go grab a cup of coffee, toast a bagel, eat a waffle, something like that. But we're going to talk about a high probability trend trade for about 25 minutes. And a high probability trend trade, guys, is when every indicator, each indicator on every chart agrees for the trade. Your triggers are the strongest. There's nothing in the way. You're taking that perfect entry that we're going to talk about in great detail today. Guys, this is your highest probability trade. This is a trade that when you take it and you follow the rules, it has the potential to win 70 to 80% of the time. If you've spent any time in this classroom, you know that I love to pawn this checklist off on you, right? This high probability trend trade checklist. Guys, I haven't had anybody yet, and listen to the words coming out of my mouth. I haven't had anybody yet follow this checklist to the letter for 5 days straight and do worse than 80% winners. They're a little bored. It takes some time. It doesn't set up every second of every day. The adrenaline junkie in you is going to go nuts. But remember, guys, we're here to win, right? We're here to make money. Losses are going to happen. Anything that wins 70% of the time loses 30% of the time. It's a normal part of a positive equity curve. But it makes sense as you learn the software to focus on that one trade, that high probability trend trade. And if you commit 30 days to it, what's that 30 days going to get you? Guys, it's going to give you the ability to read your indicators. It's going to give you the ability to be a chart reader. And chart reading is 90% of your day. 90% of the time during the day, you're just going to look at indicators. You're going to read them. You're going to take the information that they give you. And that 10% is going to be taking a trade because of the advantages presented. And when you master chart reading, and you will master chart reading, you're going to be able to open up your charts and you're going to instantly understand where the market is likely to continue. You'll be able to use that continuation point for entry. You'll understand where the market is likely to go, and it's going to have you making great decisions on targets, and you're going to understand where the market is likely to stop. And this is going to tell you, hey, no more trades into this area because this area may hold. So guys, I ask this every day of class. I want you to do two things for me for your first 30 days, for your first 60 days, for your first 90 days. I want you to let it be simple. I want you to just allow it to be 3 rules and 2 charts. And I want you to give yourself just a little bit of grace. Give yourself permission to be brand new. Say to yourself every morning, hey, I'm learning something brand new and I'm going to make mistakes and it's totally cool. Mark's going to help me fix them because I'm going to post my mistakes in the room and we're going to have a conversation about each and every one. So in the spirit of simplicity, 3 simple rules, guys. We're going to talk about the rules and the advantages they provide. And there's going to be 2 charts that we're looking for rules on. The first chart is your 13-2 chart. And you're going to use one bar, a single bar on this broad stroke of a brush, this larger, slower chart. And you're going to be able to determine the trend of the market. If it's green, see here, it's green, we're in an uptrend. And I'm only looking for rules to be met for high probability trend trades long. When it was red, I was only looking for rules to be met for high probability trend trades short. Notice that I say looking for rules to be met. I'm not saying I'm jumping in because it's green. I'm waiting for the rules to be met. And your first 2 rules happen right on that 13-2. You're looking for strong triggers and you're looking for no termination conditions. And don't worry, we're going to talk about those today. But this broad stroke of a brush gives you the green light, right? It says, okay, it's time for you to look for an entry. And that entry is going to come on the 5-1. This is where you are going to refine that broad stroke of a brush provided by the 13-2 and pinpoint your area of entry where the market is likely to continue. And that's rule number 3. And this allows you to reduce risk and maximize your profit potential. Sam, you said when you were reading the tutorials, you got confused with the area and the large triggers on the 5-1. Are the large triggers on the 5-1 chart referring to the stair-step 13-2 triggers or the large triggers of the 5-1? Sam, I'm going to give you the best answer I know how. You ready? Yes. It's talking about both. And when we go into entries a little bit more, Sam, I'm going to help you out. But here's your stair step. Here's your large triggers, right? This is all I want you to remember. When they're trending one on top of the other, look at how small your entry point is. Do you see it? And if you're not comfortable with entries yet, guys, we're going to talk about them in great detail today. But Sam, do you see how your areas are consolidated? They're tight. Can you guys hear me? Give me a Y in the room if you can hear me. Thanks, y'all. Poor Gary. He'll get it. He gets it figured out every morning. But Sam, when we talk about those trigger lines, there's 2. There's the 13-2, the synthetics, and then there's the large triggers. And when we talk more about the entries, I'm going to give you even better answers. But right now, I want you to know that when these 2 trigger lines are one on top of the other, Sam, when they're stacked, that window of opportunity becomes beautiful. It becomes very, very tight. When they are spread, and let's just say hypothetically, and guys, I'm getting ahead of myself a little bit, but that's okay because this was a great question. Sam, if you had your stair step triggers right here and your large triggers were up here, your window of opportunity, Sam, would be huge, wouldn't it? That lowest point of support to the highest point of support would be a giant, difficult to manage window. So the only thing I really need you to remember on these triggers, doesn't matter where they come from, but when they're one on top of the other, man, it is advantage you without a doubt. Does that help a little bit? Great question. And guys, you're going to have questions like this for the next 2 years. Don't ever be afraid to put them in the room. I love answering questions. But I do get distracted. So if I answer a question in the middle of a stream, guys, I apologize. Let's go through this one more time. 13-2, rules 1 and 2, 5-1, find your entry, right? So what are the rules? I've got a very simple one right here. Let me put this in the room for you. Guys, the 13-2 is your largest chart. And on your large chart, we have to have strong trigger lines, okay? On the 13-2, we need to have no termination conditions, room to the profit targets. And then on the 5-1, entry, use a limit order at the areas, at the triggers, and this is going to be your area where the market is likely to continue. So the simple equation, and I'm not an equations guy, for a trade, for a high probability trend trade, is a trade equals momentum, a clear path, and an entry area. If you stick to the plan for 30 days, it's going to teach you to read your indicators and understand all of these concepts. When you begin to stray, when you begin to trade without momentum, you've given away one of your advantages. If you try to trade without a clear path, you've given away one of your advantages. And if you don't respect the entry areas, you're probably going to end up putting a lot of additional risk on a trade, and you're going to be reducing your profit targets. So we're going to talk about how to get these all together. And we're going to do it just with the rules, guys. And rule number one says have strong triggers. What's a strong trigger? In an uptrend, when that background is green, it just means that my small triggers are above my large triggers. My large triggers are wide. They're angled in the direction of the trend. Guys, this space between the two lets me know that the odds are favorable for the market to continue up. And you're going to hear me say that in the room an awful lot. Did you have odds favorable momentum? I love the way that rolls off the tongue. In a downtrend, small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. That space between the small and the large lets me know that the odds are favorable for the market to continue down. Guys, this is a huge advantage. This is a freight train of momentum. And this is rule number one, and we commit to rule number one for the first 30 days because the advantages are there. We see them. Our likelihood of success increases. When those small triggers return to and work their way inside of the large triggers, we call this a weakening of the large triggers, and anything can happen up or down. Guys, if you had $100 to bet on a horse, one of them is an odds favorable winner and the other one is like, he might finish. Where's your $100 going? Your $100 is going with the advantages, right? So you're going to look for these advantages from the point where the small triggers break away until they return. This is your window. This is where the momentum is the strongest. This is where the odds are favorable for the market to continue up. When we go back and study today, you're going to see these tails on a 13-2 chart when we have odds favorable momentum. These are potential entries. I just want you to let that stick in your mind. When we have odds favorable momentum, you'll see these tails on a 13-2 chart. These tails are potential entries on the 5-1. So if I open up a 13-2 chart and I have odds favorable momentum, small's above the large are wide, they're angled in the direction of the trend, and I see one of these tails, my job is to circle it. And we're going to see if there was a trade. Guys, give me a Y in the room if you're with me. Odds favorable, small's above the large, small's below the large. What a great feeling going into a trade, right? Well, what are we going to do with all that momentum? We're going to make sure that there's nothing in the way. Rule number 2 says no termination conditions. What's a termination condition? It's a Fibonacci-based indicator that may reverse the market. Guys, I gave you a picture. I put this together because I think termination conditions are crazy important. Save this picture. This is my gift to you. Happy Friday. Areas that may reverse the market can be Fibonacci support, Fibonacci resistance, the red. It can be one-to-ones, these yellow dots. It can be a divergence high line. It can be a divergence low line. These are areas that may reverse the market, and you can determine whether or not they're likely to stop the market. Remember that chart reading term? With a comparison of your trigger lines versus the area. So 2 things have to happen. The first thing is price reaches support in this picture. Price comes down and hits that blue Fibonacci area. When I say price, I mean those price bars. Guys, a tick away, for all intents and purposes, is hitting the area. A tick beyond, for all intents and purposes, is hitting the area. It's an area. If price reaches this area and your trigger lines remain above the area of support, this is an area likely to stop the market. This is a termination condition, and because it is, do not take any more trend trades, no shorts, into that area. Wait for the area to break. What does that mean? That means that both the small triggers and the large triggers, the same triggers that we're using for momentum, get below the area of support. When both trigger lines break the area of support begins to act as resistance. We now have the advantage of a clear path. With this odds favorable momentum, you can see the tail. We now have an opportunity for a potential high probability trend trade short. So guys, that's my basic picture. Price reaches resistance, trigger lines remain below, no long trades into that area. Price pulls all the way back to support, none of the trigger lines have broken through, no short trades into that area. Do you guys remember when I said 90% of what you do is going to be waiting for an advantage? 90% of what you do is going to be looking at your indicators, taking the information that they give you, and then deciding if the advantages are in place. Price comes all the way back up to resistance, right? Look at this, resistance to support to resistance, Fibonacci works. When price reaches resistance, this divergence high in the second level of resistance, do you notice how all of the trigger lines remain below? Going long into this area becomes a little situation of financial suicide. God, you're trading into an area likely to reverse the market at this point. This is what we call a pivot stop out of a divergence high, meaning that price exceeds that magenta high just a little bit, heads the other way. We get a full reversal. We end up with odds favorable momentum. Guys, this adds power to the top. And when this termination condition creates a full reversal, we have what's called a strong top in place. And your trend trades are more likely to work after a strong top, as evidenced by that first 30 days, focusing on those 5-1 trend trades that happen after a termination condition on the 13-2. So let's see one go in the other direction. These price bars are trending down. We're in a downtrend, and I even have odds favorable momentum. The smalls are below the large are wide, they're angled in the direction of the trend. Rule number 1 tells me that I have odds favorable for this market to continue down. And there's a reason that these are in the order that they are. Well, price reaches 1-to-1s, right? Price bars hit it. Absolutely none of the trigger lines break through this area. Guys, this is a termination condition. No more short trades, even with the momentum into this area likely to stop the market. And thank goodness we didn't, because look at the bounce it creates. And then when this termination condition creates a full reversal, gives me odds favorable momentum, the smaller on the outside of the large, there's one of those tails, guys. There's your best chance of success as a brand new trader. So I'm going to ask the class real quick. Are you with me? Price reaches an area. Trigger lines remain above. This is a termination condition. Since it creates a full reversal, this is a strong bottom. This is your best look. And it makes me giggle to say strong bottom. Termination creates a full reversal. This is a strong top. This is your best look. Well, guys, sometimes that market's not going to play nice. Sometimes you're going to see a pivot, meaning that the market goes from down to up or up to down. You may see a pivot in the middle of nowhere, whether it is with odds favorable momentum and nothing in the way, or maybe it has weak triggers and nothing in the way. This is your final termination condition, guys, and you're going to see this one on a smaller, faster chart. You'll recognize this one and only this one on your 5-1 chart. And the idea behind this is that 3 divergences in the same location may terminate a trend. So 3 divergences. What's a divergence? A divergence is a loss of momentum. If you lose momentum 3 times in the same price range, you'll know that you've lost momentum because a negative number prints, because the cyan divergence low prints. 1, 2, 3 losses of momentum and it may terminate the trend. It becomes even more powerful when the small triggers work their way inside of the large. We just talked about odds favorable. It's true on every chart. Versus anything can happen. So let's think about if rule number one gives you the advantage of momentum, you've given away that advantage 3 times. Your trigger lines let you know that it's going away even stronger. And then if that third divergence is higher than the previous pivot from a low or lower than the previous pivot from a high, becomes even more powerful. There's one of those head and shoulders patterns. Guys, that's the only pattern that I recognize in the markets because I use Nexgen. I don't need to know these patterns. So 3 divergences in the same general location. I want you to see this one at the low and this one at the high. You may see that on a 5-1 when the market appears to be turning from nowhere. You may see that on the 5-1 when the market appears to be turning from nowhere, and it's going to allow you to recognize change before your 13-2 says it's happening. So let's see what we have here. I don't know if I have 3 divergences in the same location yet this morning. Maybe not. So we're going to skip that one. It'll happen as the day comes. No worries. But let's talk termination conditions, guys. Here we go. One right from the bottom. Price comes down. Odds favorable momentum. Everybody sees that, right? And then it reaches support. And support has all the trigger lines above. What's that look like on a 5-1 chart? It looks like an amazing opportunity to avoid a loser, doesn't it? It looks like an opportunity to respect Fibonacci, to use the trigger lines and understand where the market is likely to stop. I love it. Guys, termination conditions will change your world, without a doubt. So we're going to go through and we're going to look at terminations all day long. And we're going to look at the smaller chart terminations to help us not only see turning points, but you're going to be able to use these for management opportunities, guys. Because your chart reading, I didn't mean to close that one. Your ability to read charts, your ability to understand where the market is likely to go, where it's likely to continue, and where it's likely to stop, based on that 30 days of study, that intense posting pictures in the room, asking every question in your brain, is going to take you to what we call a medium probability trade. And a medium probability trade requires you to be able to read your charts. And it's defined as when most of the indicators line up for a trade. However, a small issue exists. Your ability to read your charts, that foundation that you build in the first 30 days, is going to have you identifying that trouble spot. This will be the vast majority of your trades, guys. Believe me when I say it, you're going to break out of this high probability trend trade and you're going to start seeing opportunities and learning how to take them and learning how to manage them. But when you execute a medium probability trade, you have to manage them assertively. Your ability to read your charts will allow you to manage them assertively. If there's trouble in your way, you may take a portion of the position off at that trouble spot, the trouble spot that you identified through chart reading, and reduce your risk to a 0 loss level. So if you're brand new and you're like, I just want to be busy all day long, do me a favor, give me 30 days to learn how to read these indicators. Give me 30 days of participation, 30 days of pictures in my room, and you're going to have medium, you're going to have high probability, and you're probably going to begin to see more and more each and every day. All right, I'm going to go back to the equation. A trade equals momentum, defined on the 13-2. Guys, I want to see a lot of yeses in the room. Is everybody with me? Momentum from the 13-2. On the 13-2, termination conditions, right? No termination conditions gives us the advantage of a clear path. So now we're going to identify our entry. We're going to use a limit order, meaning we're going to let the market come to us. And we're going to buy or sell a pullback, a small retracement in price. And we're going to buy or sell at an area inside of triggers. And this is going to give us the advantage of entering where the market is likely to continue. So let's go to the entry section. You guys notice how every rule that I talk about is available for study right here? Use those tools, guys. And don't think I didn't notice that only 3 of you gave me a yes. 3 out of 37. If you don't understand momentum, if you don't understand termination conditions, guys, this is your opportunity to participate, to use your voice to let me know. When my rules are met, thank you, Ron, covering it for the group. When my rules are met on the 13-2, thank you, Sam. I get my feelings hurt. I'm all on my feels, guys. I like to know that you're with me because I want you to be successful. It is a little early. This is your look on the 5-1 on that smaller, faster chart. In an uptrend with odds favorable momentum, with nothing in the way, it's nothing but a bunch of green up bars, right? You're going to focus your attention on these large triggers coming up, coming strong. Sam, do you remember? Trending one on top of the other, right? And we're going to identify our areas that may fall within them. Which areas are we taking trend trades from? It can be fibs, Fibonacci support or resistance. It can be a mid-band, or it can be one-to-ones. It can be one of them, it can be 2 of them, it can be all of them. But the key is that we want them to be inside of favorable large triggers that are strong, going in the direction of the trend. So all we're doing now with everything going up is we're identifying the areas that may fall within. The rules say we're going to buy a pullback in this uptrend. And a pullback is a small retracement in price going against the overall trend, going against the overall momentum. And you know I've got a picture for it, right? Whoops. Not very good at clicking pictures, but there we go. Who's in control? The large chart, the big group, right? This is the mob, and the mob says that we have momentum to the upside. The large group says that we have absolutely nothing in the way, right? These are the guys that are making the market move. The small group, we love these guys. They give us our entries. These are the guys that say, you know what? I know the trend is up. I know the momentum is up, and I recognize there's absolutely nothing in the way, but I'm going to sell a few or take some profits and push this thing down. Just a little bit. Guys, we rely on these guys. We rely on the small crowd to give us this reversal bar to start that pullback. And when we get this pullback, you're going to create a window of opportunity. At the time of this reversal bar, you're going to identify your window of opportunity. And in a long trade, it's from the highest point of support to the lowest point of support. Everybody say it with me. Inside of favorable large triggers, right? Inside of favorable large triggers, making sure that they're up, that they're strong, and we're trading from these areas. Guys, I'm going to right click and I'm going to activate a limit order and I'm going to wait for that market to come back to me. And if it comes back to that window, if it comes back to that highest point of support inside of favorable large triggers, I'm in a trade. I'm in a long trade. And because I'm in this trade, guys, I want you to remind yourself what got you into the trade. The advantage of momentum had you looking for a clear path. The advantage of a clear path had you looking for the area where the market is likely to continue. And when you get in at the area where the market is likely to continue, guys, you have a high probability trend trade. You have a trade that I'll take 1,000 out of 1,000 times. Because this is a trade that has been proven to typically win 70 to 80% of the time when you follow the rules. My initial stop is going to go where the market shouldn't go, below that window of opportunity. And guys, 70 to 80% of the time with rules met, it's a profit target reach scenario. This is your high probability trend trade. And now I want to show you a couple pictures because I want to kind of elaborate on the window of opportunity. This is a 5-1 chart. The reversal bar begins a pullback, right? And this is where we identify the window. I'm going to share this with you. I want you to find your large triggers, one on top of the other. This red box shows me from the top of the large triggers to the bottom of the large triggers. The teal shaded area shows me from the highest point of support to the lowest point of support inside of favorable large triggers. The window of opportunity is inside favorable large triggers. Highest point of support to lowest point of support. Is everybody with me on this? It's not the triggers, it's the areas within. This blue fib is outside of the window of opportunity, isn't it? It's not inside of large triggers. Not even going to look at it. It doesn't matter to me. What defines the highest point? Do you see the midband, Mark? Do you see the top of the triggers? The highest point is defined as the area of support closest to the top of those triggers. Let's do another one right here. Once again. That's okay. The red box shows me where my trigger lines are. The shaded box shows me my highest point of support, 1-to-1s. My lowest point of support, really right on top of it, the midband. Look how small the window of opportunity is. The trigger lines are one on top of the other. Guys, I literally have a one-tick range where that market is likely to continue. This blue fib is outside of the window, right? It's not in those large triggers. Don't care about that blue fib. It's just going to have to live life on its own. Go in the other direction, guys. It's the exact same thing. And I'm sharing these pictures because great entries give you easy management. Dave B, you're asking, the triggers aren't support? All right, so I'm going to type it into the room. And David, that's a great question, and this is how these pictures came to be. Rule number 3 says that we're going to use a limit order. Absolutely. We're going to use a limit order, meaning that we're going to let the market come to us. We're going to buy or sell a pullback, meaning that the market has to retrace. It has to come to us. I'll be right there, guys. And it's going to be at an area. And David, this is the one that answers your question. I want you to remember that very important phrase, at an area. And your areas are midband, fibs, or 1-to-1s. So we're going to use a limit order, right? We're going to buy or sell a pullback, and a pullback begins with this reversal bar. And where are we going to buy it? We're going to buy it at an area inside of favorable large triggers. So the triggers, David, don't act as support. It's the areas inside. They do, don't they? They do help define the areas. They define exactly where the areas have to be. Does that make sense? Man, that's a great question because I guarantee you're not the only person with that question. Do you see how the only areas, fibs, midbands, or 1-to-1s, inside of those favorable large triggers? Right here. Why didn't I start the left edge at the pullback? Oh, I got you. Because Mark, the market moves, doesn't it? Can't conditions change in a moving market? This midband was all the way down here at 29. But it ended up at 30.50, right? I'm looking for a collision. I'm looking for a collision of price and areas. Zeba, you're totally lost? We'll do one together, right? And David, you can do whatever you want to do, right? If you want to trade from triggers, trade from triggers. If you want to try and wait for support below the triggers, wait for support below the triggers. Guys, what I'm telling you is that if you have an area inside of those favorable large triggers, this is your most likely point of continuation. This is the point where the market is most likely to continue in the direction of the trend. I promise. I've got 3,000 pictures of it, right? Mark one on top of the other. Because when they're one on top of the other, look at how small that window is. And now let's go back, because you guys are posing great questions here, and I love them. Just for grins, I want you to see something. And guys, this isn't a trade. We're not even going to look at the 13.2. This is the S&P from today. And I want you guys to use your imagination just a little bit. Let's say, which one which, Ziba? We probably are, David. Does it matter? Oh, it doesn't matter if it's a fib. It doesn't matter if it's a mid-band. It doesn't matter if it's one-to-ones. I just want the one on top. It's going to change probably every trade, right? So guys, here we go. In this particular trade, this is the bottom, not a real trade. This is the top. Give me a Y if you're with me. At the time of the reversal bar, I can identify the low end of the trigger lines, and I can identify the high end of the trigger lines. That's the first step. It doesn't matter, Ziba. We want them just one on top of the other. Now watch this. Here's resistance. Whoops. Here's resistance inside of favorable large triggers. Here's resistance inside of favorable large triggers. Here's a mid-band inside of favorable large triggers. These areas within the large triggers represent my window of opportunity. What does that mean? That means that from the top of the triggers, that's not my window of opportunity. The market isn't likely to continue right here. The market is likely to continue somewhere between that lowest point of resistance and that highest point of resistance. Does that help a little bit? So what does that mean for us, guys? That means that if the trigger lines are split and wide, and I'm going to find a picture of it real quick. Let's just scroll back. And again, I'm not saying that there's a trade to be had here anywhere, but I'm showing you the difference between a consolidation of trigger lines and where they're spread. And of course, the market isn't going to give me a great example. Not just yet. This is kind of a good example, right? Trigger lines are split. They're not one on top of the other. Resistance is down here at 41.02. That mid band's up here. It's not quite inside all the way at like 40.05. Mark, it's because there are no right and left edges. And that's where you're struggling. So here we go. Live market right now. Do we have odds favorable? Cool. And all we're going to do, guys, is we're going to identify, because we're right into a divergence low. But let's capture this in the moment, okay? So Mark, this is what it looks like live, right? That's the most current bar on both charts. You with me? Pretty cool. We got this. Here's your reversal bar. There's that first up bar after all of the down bars. So let's use the shape tool real quick, and I'm going to zoom in, and I want you guys, because we know that the rules are met on the 13.2. I'm going to use my first shape. No worries. All I'm worried about, Mark, and look, I can start it, I don't care, I can start it all the way over here if I want, but let's refine it. That's the top of my triggers, right? That's the bottom. It doesn't matter how far left this box goes. At the time of the reversal bar, that's what I'm looking at. That's the wrong color, isn't it? There we go. I don't care how far left this goes. This can go back 10 days for all I care. And it can't really go forward because, well, there's nothing to go forward to. Look what happened. So let's pull it back up. If this is from the top of the triggers to the bottom of the triggers, I'm going to use the shaded one. What are the areas inside of the favorable large triggers, guys? I have a mid band right here, right? I have Fibonacci resistance, and I have 1-to-1s. Guys, do you see it? I have a mid band. I have Fibonacci resistance. I have 1-to-1s, and they're all inside of those large triggers, right? Pretend like the triggers are like a bag or a box. Guys, this is your window of opportunity. This is the area where the market is most likely to continue. Did any lights go off for people? Mark, we got you there. Guys, this is why your questions are so important. Because everybody's thinking the same thing. Everybody's thinking the same thing. And when you ask this great question, and then of course, look what happens. The market continues down right from the area inside of favorable large triggers. And check it out, guys. That was the bottom of the window. That was the middle of our window. And it went up to the top of it, right? Which is why your initial stop is going to be 12 to 14 ticks. And it's probably going to be outside of that window of opportunity where the market shouldn't go. Man, I love this stuff. Absolutely, Safia, from the lowest point, which is the mid band, to the highest point, which is 1-to-1s. And then you've got that cute little fib sitting right in the middle, in between them. So there's really 3 areas where it may continue from, right? But we take the 3 and we consolidate them into a window of opportunity. And guys, I'm putting a limit order right at the bottom of that window of opportunity. This is where I want to enter the trade, because these trigger lines say good luck getting a deep pullback. If it happens, cool, my stop's in the right place. But guys, this is where the magic happens. This is where the market is likely to continue. So top is fibs. Top is the 1-to-1, Safia. These yellow 1-to-1s are above the fib. Do you see it? No. Are you asking me to rank them in a level of importance? The concept is they all have the exact same power. One isn't stronger than another. They are just meaningless little lines until they fall inside of favorable large triggers after a reversal bar, and then they are freaking superheroes. Whichever's there. So you're not always going to have all 3, right? Sometimes it might just be a mid band. Do you see it? Sometimes it might just be a fib. This one happens to have all 3, which makes me feel even better about the trade, because I've got a tight little window of opportunity. I've got 3 different areas where that market could bounce. I love that look. And guys, it sure did, didn't it? And then the market continues down straight to a termination condition. When there's only one, that's fine. Where there's only one, what do you say? But it's the same. Zeba? Oh, no worries. NG time outside of the window of opportunity where the market shouldn't go. If this was my window of opportunity, where's the market most likely to continue? It's most likely to continue from an area inside of favorable large triggers. Give me a Y in the room if you're with me on that. The area where the market is most likely to continue is from an area inside of favorable large triggers. Which means that if it goes beyond that window, I don't want to be in that trade. I've given up the advantage of my best entry. So my initial stop goes above that window. David, let me see your picture. And guys, this is great. Go back and practice windows of opportunity. All right, so David, great picture. Can we refine a little bit? And Ziba, this answers yours on one line as well. All right, David, I love this. Which box did you give me? You gave me from the bottom of the triggers to the top of the triggers, right? The rules say the areas inside of favorable large triggers. David, this didn't have rule number 3 met. Unless you are 2 ticks below resistance, the window of opportunity, in which case you are in this trade 5 or 6 ticks higher, at least 5 or 6 ticks. Do you see it? At the time of the pullback, David, at the time of the pullback, this was your window right there. Does that make sense? And if you were 2 ticks below that window, you might have gotten filled considerably better. Which means that you also would have had a lot less risk. Does that make sense, David? And what else does that mean? That means sometimes it's not going to get you. Sometimes it's just not going to happen. But David, assuming that the rules were met, did you need market flow to tell you? Mark, because the mid band was inside of favorable large triggers. That's it. You guys are making this harder than it should be, right? Area inside of favorable large triggers. I love it though, because you guys are making this class better. So Ziba, how do we identify them? Are you ready? Let's do it. Let's identify them. Watch this. Let's get rid of all that noise. Oh, it's not showing my synthetics. Hold on. It's not giving me the synthetics. So let me bring this back up. And we'll find a picture. Maybe we can use Dave's picture again. Dave, I'm stealing all your hard work. I hope that's okay. All right, Ziba, are you ready? That's the highest line, right? When I look at these triggers, this is the line that's the highest. That's the northernmost. It's still that line. It's still that line. It's still that. See how we can just follow the path? That's your highest point. There's your lowest line. And if I just follow the path, that lowest line becomes part of the synthetics. But do you see how I've got all my arrows above the top, all of my arrows below? And then where are the areas inside of it? I've got blue support and 1-to-1s. Pretty cool, right? Does that help a little bit? Just think about the highest point, the highest line of those triggers. I don't care if it is the synthetic. I don't care if it's the large. If my rules were met, Mark, absolutely I would. If my rules were met, I would buy. Because I'm in an uptrend, because my triggers are up, they're strong. Because I have areas inside of favorable large triggers. But Mark, it's not a fair question for me, because I don't know what's happening on the chart that tells me that it's okay to look for an entry, right? It may be coming right off of resistance. There may have been a termination condition there. Sam, it says, what is a favorable aspect of the large trigger being referred to, or what is not favorable aspect? Yep, that just lets me know that I'm in an uptrend, Mark. But I don't know what's happening on a larger chart, so I can't say that there was an entry there. Because remember that the two charts work together. I have to have a 13.2 with strong triggers. I have to have a 13.2 with no termination conditions. And then, guys, here it is again. Wait for the reversal bar. Identify the area of support inside of favorable large triggers. This is where the market is likely to continue. You're not waiting for the 13.2 to create a tail. Guys, you're waiting on the market to get there. And Safia, I think you asked, how soon, right? Use the large triggers, entry trigger. Safia, use the large triggers to define your areas, where they are. This is just a momentum indicator, isn't it? When small's above the large, what does it tell us? What's that wonderful phrase? When the smalls are above the large and there's separation between the two, it's just odds favorable momentum. These are your small triggers, just like they're your small triggers here, Safia. These are your large triggers, just like they're your large triggers here. While these define momentum in the overall look of the market on that big, broad stroke of a brush, these will help you identify momentum on a smaller time frame. But here's the difference. Are you ready? And I think I've got your question. This is the crowd. This is everybody. This is the overall momentum of the market. This isn't your entry chart, right? This is your entry chart, and they're strong at the time of the pivot. See how they turned against you on that smaller, faster chart? Guys, that has to happen. It is so rare that the small triggers won't turn against you, because if they don't, you're never going to get your push back to the area. But this is a smaller, faster chart. I'm relying on the trigger look here to carry that market in the direction of the trade. Does that make sense? Was that kind of your question, Safia? Do we worry about this one? Awesome. The only time when I'm really worried about that small trigger on my 5-1, we already have a bunch of pictures today, don't we? I love this. The only time where I'm concerned about those small triggers on my 5-1 is when these divergences start to print. And then when they go to anything can happen, strong and wide and in the direction of the trend, Sam. I was trying to think how to answer that. Strong and wide in the direction of the trend. Strong and wide in the direction of the trend. Same thing as a 13.2. When the triggers are strong and wide, there's a lot of momentum on every chart. They're the same triggers, they're just different time frames. When they're strong, see how they're flat here? That's not a good look. There's no momentum behind flat triggers, Sam. That was a great question. And then when that momentum picks back up, notice how they're strong and in the direction of the trend. So the same is true. If we're talking about favorable, strong, large triggers on the 5-1, we want them strong and wide in the direction of the trend. Whether it's a 5-1 or a 13.2, no matter what it is. And when we come back to this one on top of the other. Yeah. There's strength in that look. Safia, did that answer your question? What's a trigger line? It's two moving averages working together to help you gauge momentum. That's all it is. Small triggers are solid, large triggers, it's that look that they give you that's important. And guys, I don't know anything about programming, but what I do know is that when my small triggers, these solid lines, break away from and create space between themselves and the large, then I know that I have an advantage. that I have a look that tells me that the odds are favorable for the market? Absolutely. Two trigger lines working together. Similar but different, Sam. Similar but different. It's a momentum indicator. That's all it is. So Mark, the smalls work with the large. They work together in symphony to let me know that the odds are favorable for the market to continue down. Rule number one is momentum, right? You guys have the advantage of Fibonacci to understand when price has not reached a key area, when it still has room to the target. And now you have the advantage of being able to identify where the market is likely to continue. And guys, when you put these three together, you'll be unstoppable. But you have to work through it a little bit. You have to go through. You have to study. And guys, circling tails is a great way to study. When the rules are met on the 13-2, circle a tail. If you circle the tail and there's areas of resistance inside of favorable large triggers, guys, you have a high probability trend trade. You have a trade that typically wins 70 to 80% of the time. You have a trade with the advantage of momentum, the advantage of no termination conditions, and the advantage of entering where the market is likely to continue. All right, Safia, they're both down and strong. That's what's favorable, is they're both down and they're one on top of each other. Does that make sense, Safia? They're both in the direction of the trend. They're both angled down. And because the 13-2, guys, this is a synthetic. It's a higher time frame. It's going to flatten out a little bit every now and then. But everything says down, Safia. Everything is pushing to the downside. Everything is going that direction. That's what's favorable. Does that make sense? Let's find an example of not favorable. It's okay. Safia, do you see how these are flat and lifeless? There's no strength. They're close together. Ah, I think I just had an aha moment. When the triggers are wide. So Safia, on your picture, where's the lowest point of resistance? The midband, right? So your order entry goes just below the midband. That lowest point of resistance inside of favorable large triggers. Does that make sense? Perfect. Guys, remember, you're going to try and make everything more complicated than it is, I promise. I did it a lot, and it's going to feel that way for a little bit. So I want you focusing on the best of the best. I want you focusing on, first and foremost, odds favorable momentum. Absolutely, especially, Sam. Favorable large triggers are in the direction of the trade. Which direction are these triggers going? Up and strong. Which direction are these triggers going? Up and strong. I have strength on both charts. I have odds favorable on both charts. I have no termination conditions. This is your look, guys. This look right here is going to keep you from trying to go long over here at flat triggers, right? No momentum, termination conditions is going to keep you from trying to go short at areas outside of the large triggers. Do you see it? Price reaches resistance. No trigger lines break through. Guys, this is probably the best class of the week. These are amazing questions, and we'll spend all day on entries if you want. Let's do one more thing, and then I've got to go grab my water. I'm going to put just triggers on here, okay? Dehydrating over here. Can't have dry eyeballs. I'm getting LASIK today. I'm going to be able to see you guys better on Monday. Create the box on the 13.2. There you go. Safia, odds favorable momentum, no termination conditions, circle the tail. That's it. On the 13.2, that's all you need to do. Rules 1 and 2 are met, right? Small's below the large are wide, they're angled in the direction of the trend. I haven't reached an area, so if I see one of these tails, I'm going to circle it. And if I scroll back, if that tail ends up inside of favorable large triggers, if that circle lines up, it's a rules met trade. So here we go, guys. Let's do this together. Need some class participation on this one. Good morning, Mary. Long time no see. All right, guys, we're going to do this one, and then I'm going to come back and we're going to look at all your charts, okay? And guys, I want participation from everybody working on entries right now. Do I have odds favorable momentum on the 13.2? How do we define odds favorable momentum? The smalls are below the large are wide, they're angled in the direction of the trend. Yes. So rule number 1 is met. And we're going to go back and forth. Rule number 1 is met, therefore I have the advantage of momentum, yes? Rule number 2 says no termination conditions. Has price reached an area? Have those price bars hit a blue fib? Have they hit 1-to-1s? Is there a divergence low? Absolutely not. So now, no termination conditions are present, right? Guys, I'm loving this class today. I don't know if you can hear it in my voice. Now I have the advantage of a clear path. I have momentum. I have a clear path. So now we have to go to an entry chart, right? I have to go to the chart where I'm going to refine this broad stroke of a brush. Guys, what happens in 1 bar here happens in 20, 30 bars. So Safia, my question to you, because of the momentum, right? Because of the no termination conditions, your 5-1 is going down with that same momentum, isn't it? It's just red bars, and you're thinking to yourself, I know that I need to take a trade. I know that I have rules 1 and 2 met. How do I figure it out? Well, Safia, where are your large triggers? They're down, they're strong, they're up here. You can see it, yes? Pretty easily. And everything's going down. These triggers are coming down, Safia. And not just Safia, but I know that when I see someone that needs a little help, I'll say your name a couple times. These trigger lines are coming down. There's only one area inside of them right now. There's a mid-band inside, right? But right below it, I've got 1-to-1s. Right below it, I have Fibonacci resistance. I haven't created a window of opportunity yet, right? All I've done is identify that my triggers are strong. All I've done is identified the areas that may fall within. Does that make sense? Not putting a trade on yet. Okay. So Safia, what do I need to see on the 5-1 to really define that window of opportunity? What am I waiting for with everything going down? And I'm going to put a little arrow where you decided that your rules were met, where you identified the areas that may fall within, right? Just going to put that little arrow there. This is where you said, I see areas. This is where you said, I see strong triggers. And Mark, you're absolutely right. Ziba, I need a reversal bar. Look at how much happens between that point where you decide to take a trade Look at how much happens from the point where you decide that it's time to take a trade until you get a reversal bar. Sophia, do you see how the areas inside of favorable large triggers have changed, right? The market is always in motion, which is why we don't just arbitrarily put limit orders all over the place. What we do is we wait for the reversal bar because we have to sell a pullback. All right, so I'm going to use a rectangle. Ziba, do you see that this is the highest line of my trigger lines? Mark, Sam, Joel, who else do we have in here being awesome today? All of you. All right. Doesn't matter how far it goes this way, right? Where's my lowest line? Right there, right? You guys see it? Bonk. Good. I love it. All right. So there's my trigger lines. Where's my, and I'm going to do this. I'm going to take the same box. Where is my highest point of resistance? 1-to-1s, right? Right there. So I can move that trigger box down to the highest point of resistance. Where's my lowest point of resistance? The mid-band? So there's your window of opportunity. Pretty cool, right? So where does my limit order go? A tick or two below that lowest point of resistance, guys. Do you want to see if we get a trade? What red fib? So who asked that? Where did that go? I just saw it. Sophia, where do we look for termination conditions? $13.2, right? Don't be sorry. Sophia, you're asking the questions that not everybody's brave enough to ask. 13.2. Where's my picture? I don't know. 13.2, because you're trying to figure out everything on the 5-1 that isn't important, Sophia. 13.2 tells you the momentum, right? Not the 5-1. 13.2 tells you about termination conditions, not the 5-1. What kind of chart is the 5-1, Sophia? Guys, what kind of chart is the 5-1? It's an entry chart. It's an entry chart for when I have momentum. It's an entry chart for when I have no termination conditions. It's a smaller, faster chart. All I'm doing is refining the information that the large chart gave me. So as we do this, where the heck is my picture? I'm going to take a picture of my picture real quick because we've identified that window of opportunity. And you guys know that you can do the same drill on your own, right? You can scroll back and do bar by bars and just practice all day long. Sophia, do I care about this one divergence on the 5-1 chart? And anybody? No, because I gauge momentum on the 13.2. Do I care about this Fibonacci resistance up here on my 5-1 chart? No, it's in my rearview mirror. What about this divergence up here? Do I care? No. Guys, to hell with all that information. It's just going to confuse you. But what do I care about? I care about this mid-band and this fib because they're inside of favorable large triggers. And guys, this is my focus. 100%. So what you're going to do is you're going to train your brain to get rid of all the noise around that window of opportunity. You're going to train your brain to stop seeing all the crap that doesn't matter. And I'm telling you guys, it takes a minute. It takes a minute. But if you just focus on that area inside of favorable large triggers, that's where the market's most likely to continue. Who played Little League or softball growing up? Anybody? No, not on your entry chart, Zeba. Couldn't care less. Doesn't matter. Did anybody play baseball? Anybody play hockey? Maybe you were the goalie. Soccer, maybe you were the goalie. Couple softball games. Soccer. So, Zeba, if I kick, let me open this up. If I kick a soccer ball from right here as hard as I possibly can, that's the back of the net. Resistance inside of favorable large triggers is the back of the net. If you played indoor soccer, it's the wall. If you played Little League, it's the cage behind you. If you played hockey, it's the back of the net. And what happens when you throw a ball into a wall, when you kick a ball into a wall? It bounces, right? Physics. Guys, areas inside of favorable large triggers are your wall. And that's why I don't care about any wall outside of those trigger lines. Absolutely, Safia. I'm going to go a tick or two below my lowest point, right? That's one tick. Why not give it two? Because what does the 13.2 say as far as momentum goes? It says that I'm on a freight train, right? Holy smokes. This market is railing to the downside. There's absolutely nothing in the way. That's why I picked the lowest point of resistance. And that's why I go a tick or two below, because watch as the market comes up. See how that mid-band drops? Another up bar, the mid-band gets a little bit lower. Another up bar, the mid-band starting to level out now as it comes in. And guys, there you go. You're now entered at the area inside of favorable large triggers where the market's likely to continue. Sam, where does your stop go? Where the market shouldn't, right? Initial stop above, Safia. Above the large triggers, above the areas inside of the large triggers, where the market shouldn't go. Because if this market continues all the way up here, then we're no longer in a trade with all those advantages. All right, so we're in, and you're down a tick, and you're down another tick, and you're down another tick, and you're down another tick. Ask yourself, am I inside of the window? Am I still at the area where the market is likely to continue? Do you guys see that you still are? Do you still have the advantage of momentum? Do you still have the advantage of a clear path? And you're still in the advantageous area, right? Relax. Let the trade do what it's going to do. Now it's right at the top of the window. And there's a reversal bar. So because you waited for the pullback and didn't jump in early, because you could identify where it's likely to continue, guys, you're in. Reversal bar, I reduce risk. And there it goes, right? And there it goes. And it keeps going. And it keeps going. And the market doesn't give any indication of slowing down for 7 points. Guys, this was today. I didn't go back and handpick this one, did I? This was today. This was today's market. All right, here's a picture. What direction are my large triggers? They're flat. Are they red or green? Let's just use colors right now, Sam. Red or green? They're red. What color are my synthetic triggers? They're green, right? They don't even agree? Is it safe to say that if these triggers don't agree, I probably don't have odds favorable triggers? I don't have favorable large triggers? They're not both wide and angled in the direction of the trend? Pretty cool, right? What a great visual to just sit on your hands for a minute. What a great visual to keep you out of trouble because rule number 3 isn't met. Guys, this has been the best first hour ever. Absolutely love this first hour. I'm going to put some indicators on my chart, and I'm going to go grab my water because I'm feeling a little bit dehydrated. Oh, Safia. 1, 2, 3 divergences in the same price range, right? Take care, Mark. I'll be right back. Nice eye. Look at this. 1, 2, 3, 4, 5. Another reason not to go long yet, right? Let them break. And look where it happened. You had odds favorable. It was starting to go through. But these divergences said, hey, sit on your hands for a second. Let it break. And if it breaks, well, then maybe we'll look for an opportunity. And it didn't present. Good morning, Mike. Nice to see you. All right, guys, I'm going to take just a few minutes. Great first hour. Thank you, everybody that's participating. I think a lot of lights went off for a lot of people. I think there's a lot of aha moments this morning. Let's build on that momentum. I'm going to come back and start looking at your charts. I'm going to leave you with the S&P. Whatever Mike says, don't listen to it. Just kidding, Mike. Guys, everybody's welcome in this room. Always, always, always. But we're going to keep it focused on education. I'll be back in just a minute, and we'll hit that second hour. Joel, take care. Enjoy your weekend. Joel, can we look at your charts real quick before you run? Do you have a second? I know you posted some in the wee hours of the morning. It's Friday. I don't want you to miss out. All right, so we're going to work our way backwards on yours. All right, odds favorable. Smalls went inside the middle of the large, still frustrated. All right, Joel, are you ready? Smalls above the large haven't broken, right? 50-50. Likely potential to break, but hasn't. You take a perfect entry. You take a conservative exit. I love everything about that trade. Joel, that one's perfect, right? Nice, Mike. So, Joel, I want you to take that one and remember the way you did it. Here you have odds favorable. We're going on this one, right? Smalls directly into the one-to-ones. Absolutely no trigger lines through. You took a low probability trade and you made money. You used the momentum. You used no divergence. You took the perfect entry. Guys, perfect entries make trades manageable. You're trading into trouble, but that momentum carried you forward and you didn't get greedy. You got out at the mid-band. Once again, Joel, great execution. Smalls below the large are wide. They're angled in the direction of the trend. You have an area of resistance right there at the large triggers, a little bit above. Joel, did you have the advantage of momentum? Yes. Did you have no termination conditions on the 13-2? Yes. Joel, did you have a mid-band, a tick above, large triggers trending one on top of the other? Joel, this is a cost of doing business. Did you beat yourself up over this one? Were you wondering, what did I do wrong? So, Joel, do you know what that tells me? It tells me that you don't trust your rules. Because your rules were met 100%. And anything that wins 70 to 80% of the time has to lose 20 to 30. Joel, great trade. I would have taken that trade as well. And we saw that one. You gave away the advantage of momentum, didn't you? Small's inside of the large. The large are up, but there's no space. Small's at the large. You gave up momentum twice. Your trigger lines are split. Why would you give up momentum when it's so important? And why would you check yes if it wasn't there? Because if you check no, Joel, it keeps you from taking this trade, and your brain hates that. If you're going to use a checklist, you have to trust it. You didn't have odds favorable momentum. It's still a good looking trade, and support was likely to hold based on where the trigger lines are, right? But it wasn't likely to stop at the high point without momentum. It was likely to push down here to the low point. Guys, trust comes through repetition, and repetition is great unless you do something different every time. So you learn to trust termination conditions through studying termination conditions. You learn to trust odds favorable momentum through studying odds favorable momentum. And you learn to trust your entries, guys, when you study those darn things so many times that nobody's going to keep you from taking a trade with the rules met. I've got a checklist for it. Does anybody want it? Does anybody think, man, it might be a good idea to trade with a checklist? I hope so. I'm going to give you one that's even better, guys. I'm going to put a checklist in the room that not only talks about the conditions that give you a very clear advantage, I'm going to put a checklist in the room that gives you pictures straight out of the manual of what each of those rules look like. Joel, you're doing amazing. Don't let losers get you down. Guys, you're going to lose trades. It's impossible not to. But think about it. If I take a loser and I can say with honesty that I had yeses across the board, it's a cost of doing business. It means, yay me, I followed my rules. My execution was flawless. And it's just a cost of doing business, guys. One of the reasons that posting in this room is so important, because you're going to take losers and you're going to let them mentally affect you, and you can post it in the room and we can have a conversation and I'll tell you, hey, great job. It just didn't work out. All right, guys, I'm going to take that break I said I was going to take 20 minutes ago. I'll be back in just a minute. If you take a trade, take a trade. If you don't have a trade, maybe you see price reaching one-to-ones and absolutely no triggers have broken through. Take a picture of the chart, label it termination condition. Joel, you have an awesome weekend. I will see you on Monday, my friend. I'll be back in just a few minutes, guys. All right, guys, let's get back to work. I'm going to start looking at some more pictures that you guys have posted. I want you to remember that every time you post in the room, I'm going to talk to you, but it's for everybody. When pictures get posted in the room, it's for everybody's education. So you're not just helping you, you're helping the people around you as well. So don't be afraid to do that. Terrence, I'm sure you're trading right now, but we're going to start looking at your charts. Let's see what Terrence did this morning. On a 13-2 chart, let's see where you got in. So Terrence says, when I have a termination condition, right, and everything rolls, he's looking for an opportunity to continue the move back up to 78.50. This is a continuation trade. Terrence, this is awesome. What you can't see on Terrence's other chart is that there was actually a trend trade that didn't work out, and this is its continuation. I love that. I actually took that same trade this morning. I lost the trend trade, rules met trend trade, right here. Same one. I took quick profits, and then I got stopped out, and then I took the continuation. Sometimes they don't work, guys. Sometimes they get stopped out. This one, everything says up. There's a pullback to support inside of favorable large triggers, and the market continues up. Would have loved to have seen a circle down here as well, Terrence. Nice job this morning, though. Nice trading. Joel, I think you're gone, but we're going to steal your lesson anyway. Odds favorable. Whoops. Nice. Odds favorable. No termination conditions. Guys, what do we think about the entry all the way down here instead of at resistance inside of favorable large triggers? Rule number 3 gives a much better entry, doesn't it? Getting it at 95 instead of 88, that's $70. That's $70 of extra risk. That's $70 of unrealized profit. And David, I think this is the one that you said you waited for market flow on. Is that right? You have the advantage of momentum. You have the advantage of no termination conditions. And guys, you have the advantage of a window of opportunity that is one line wide. Why on earth would you need confirmation with so many advantages? You don't, right? Take it at the area, guys. Trust the areas. Scrolling, scrolling, scrolling. A lot of conversations in here today, guys. Thank you so much. Let me see where we're at. Terrence, we got you. Joel, we got you. Bunch of shenanigans from me. Man, I post a lot, don't I? Is it slow in there today? Here we go. Gary, let's see what you did. Gary said, odds favorable, no termination, pull back to resistance inside of favorable large triggers. Trust that move all the way down. Gary, absolutely beautiful. I could teach a class with that trade. Guys, look at his entry. The bottom of the window of opportunity. Right at the bottom, lowest resistance inside of favorable large triggers. Beautiful trade, Gary. Once again, Gary, we have a slow loading picture. Let's see if we can't get that thing up real quick. Maybe my computer has a case of the Fridays. I'm going to try it one more time, Gary. While I do that one, I'm going to click on Indu's. Indu, you said, and guys, I did post in the traders chat room a little bit this morning. So Indu, your question was, I hope you're still in here. It says, Mark, today you posted this trade in the traders room on the 13-2 when the small trigger is above. The mid band of the large trigger is below the mid band. This is a 50-50 trade. Also, the 5-1 was not supportive for the trade. The two triggers were not together. Indu, was there a question for that? And guys, because I like this, I should be able to defend myself in a court of law, right? If I take a trade. So Indu, you were tardy to the party on that one. You're absolutely right. It wasn't a high probability trend trade, was it? It was a high volume area trade. It was a termination condition, and all of my triggers rolled, and I identified on my market flow chart a high volume area at the large and the small triggers up. So Indu, this is a totally different trade. This was not a high probability trend trade. And guys, I want you to see how many pictures I took on this trade. There's my entry. And then I took another. 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 And another. And another. And another. Pretty cool, right? Guys, take as many pictures as you can. Over and over and over. Yeah, and it was just a different trade. It wasn't a high probability trend trade. Not at all. So good eye. Remember, eventually you guys are going to grow outside of that high probability trend trade. You're going to study other trades. Gary, pivot to space, a termination condition. Not so much a pivot from space. Gary, this is a termination condition that you went short into. Triggers didn't break, no momentum. This is the man. I sure hope it keeps going even though it says it's not. You broke your rules there, Gary. All right, Mary, let's see what you did. Strong triggers, no terminations. Pull back to an area of resistance inside of favorable large triggers. Mary, it didn't work out, did it? Mary, can we talk about something? Let me show you. If the conditions remain the same, right? If the rules are still met, this one didn't work. And Mary, this was a perfect trade. I love everything about it. What a great trade. Every advantage, right? Sometimes it doesn't work. It's a fact of life. Look at where your small triggers rolled over. Look at how they pulled right back to them. If the conditions haven't changed on the 13-2, if it's still a short, if you still have that momentum, that's a good opportunity for a second chance entry. And I took that same picture this morning. I lost a trend trade. It went below, took me out of the market. Everything rolled. Small triggers rolled, headed the other direction. I still had a long look on my 13-2. And I actually got that entry, that pullback right to the small triggers inside. And it went straight to the target, Mary. So something to begin to study. When the conditions are great and it just doesn't work, if the conditions don't change, and I'm not sure that they didn't change here, it creates an opportunity over here. So I hope that helps a little bit, but it was a perfect trade. I would take that trade 1,000 out of 1,000 times and wouldn't feel the least bit bad about it not working out. It is 100% rules-based and the advantages were there. It's just a cost of doing business today. And then Paul. Absolutely, Mary. Nice to see you back in here. All right, Paul. So you're batting 500 on this one now. 3 divergences in the same general location may terminate a trend. 3 losses of momentum, right? You're kind of giving away that advantage of momentum there. And then once again, Paul, I don't know if you're with me. This one doesn't work. It stops out. That's okay. Your triggers roll. And there's your stab back to it with the conditions still right for a long. Do you see it? No worries. So 3 divergences, you're losing all sorts of momentum, right? And it pushes right down to that lower point. This one doesn't work. Triggers outside, yeah. But when everything rolls and all of your triggers are green and headed the right direction, do you see where it stabs right back to the midband inside of the small? Same thing that we just talked to Mary about. This one didn't work. That's cool, it happens. And then there's that continuation opportunity. And I'll go back to this one, and there's that same picture, right? Conditions didn't change. Everything rolls, and then you get an opportunity to go back in the direction of the trade. It was a good read. Yeah, me too. I'm always glad when you guys post. Guys, I learn something every day from you guys. I hope you know that. Every time we talk about charts, I learn something. I'm very thankful for you guys in here. Oh, Mike, you're playing on Apex. I like it. Nice job. Let's see what's next. Gary? Smalls below the areas. We're wide. We're coming from a good termination condition. There's 1 divergence on a 50-50 as it pulls back. Guys, you notice on this picture, can you see it? The window of opportunity goes from 76.25 all the way up to 79.50. So we've got 12 ticks of window, which means that we have about 18 points or 18 ticks of risk. Do you guys see how that works? Lowest point to the highest point, that's a big window of opportunity on an area that hasn't broken. That's where you have to start weighing things out. Is that my trade? Am I willing to take that one? Earl, let's see what you did, my friend. Earl caught it before the window. As it begins to break, coming down from that termination condition, no, you catch the one right in the window right there and take it right down to the trouble spot. Earl, nice trade. I like it. And then Gary, 50-50 trade with divergence, no market flow signal. You chose not to take it. I like it. Great job sticking to your rules. Rules do it, right? No trade taken. You were looking for confirmation and it never really gave it. I love it. Great job. Rules are all we have, guys. Earl, nice one. If you get into that mindset, either the rules are met or they're not. Smalls below the large are wide. They're angled in the direction of the trend. I wonder if I have a window of opportunity from the lowest point of resistance to the highest inside of favorable large triggers. It looks like I do. In Ziba, I want you to get into that same habit. If you take a trade, take a picture. Before you take a trade, take a picture. During the trade, if you have time, take a picture. After the trade, take a picture. Write what you see. If you write what you see on a chart every time you take a trade, you're going to begin to read your indicators. Awesome. Awesome, awesome. Sam, you say probably difficult to take the trade again in the same area after losing a trade. Sam, you've got to work on your mindset. Are you ready, guys? Do you want to know how to trust? Sam, do you want to know how to take a trade even after you lose? Do you guys want the secret? Do you really? All right, I'm going to give it to you. You guys want to know the truth? It's not gonna click like that in the first week or the second week or the third week. Do you guys remember when you follow the rules for a high probability trend trade? What's the odds of it winning? If I go back and I find 100 trades, about 70 to 80%, right, Sam? All right, so Sam, if I take 100 trades, 100% by these rules, how many trades can I expect to lose? Lose 30, right? Okay. Do I get to pick which 30? Do I have any idea which 30 you're going to lose? I don't, do I? So what does that mean? That means that I have to trust my rules so much that I can take a loser and still take the next trade. It means that I have to trust my rules so much that I never go into a trade expecting to win. I go into a trade looking to execute my rules because my rules have been proven through study and repetition to provide more winners than losers. It creates a statistical advantage. Does that make sense, guys? So look, small triggers below the large triggers, right? Did this trade have the advantage of momentum? Let's do this. I want to take a picture of this one. And then I'm going to do one more thing, guys. I'm going to take a picture of the set of rules that provides me a statistical advantage. And I'm going to put this chart up here. And I'm going to put these rules that have been proven to win more than they lose right on the chart. Is the market coming from a good top or bottom? It looks like it's coming from resistance. I'm going to give that one a yes. Do I have odds favorable momentum? Yes. Do I have no termination conditions? Yes. Do I have an area for entry inside of favorable large triggers? Yes. Guys, this is a trade that wins more than it loses. This is a statistical advantage. How do you build trust? Guys, you build trust through repetition. I want to show you something, and this isn't a coincidence. This is a spreadsheet. This is the spreadsheet that was provided to you guys. This is just a picture of it. This is every trade. Every trade taken. How the trader felt. What the trader noticed, how the targets worked. This is repetition creating trust, okay? Guys, on that same spreadsheet, you have an area where you can take a picture of when your rules are met. You're developing trust through repetition. If you omit this step, if you don't take pictures of everything, if you don't try to take the same trade, if you don't study your rules, guys, you're not developing trust. What you're doing is you're trading on hope. And hope is bad. So Paul, you say you're really working on trust this week. Do you know what I do when I have trust issues, guys? Is I go back and I look at my trades and I put them up against my plan. I put them up against the plan that I created that tells me exactly what has to happen to get into a trade. And I can't find my example plan. There it is. And if I go through and I look at my trades and it meets my plan and my rules are met and the advantage was there, then I'm okay. And guys, some days, and I'm not going to lie, some days out of that 100 trades, you might take 10 losers in a row. Don't take 10 losers in a row with live money. You have to say to yourself, you know what? Even though my statistical advantage is there, there's a point where I'm not going to give away all my money. I'm going to shut it down. I'm going to go to simulator, and then I'm going to work on making sure that I followed my plan. Guys, the plan is in place. Developing trust takes 1,000 repetitions of that plan. Gary, odds favorable, termination condition, no divergence. You take the trade and you manage quickly. I like that you manage quickly because you're trading directly into a termination condition. Indu. Let me see if I can make this smaller. You and John Novak are sharing a computer. Here we go. Nope. Let me put the decrease on that one. So Indu, you say that's your 5-1. There's your 8 range. There's your 13-2. 13-2 had odds favorable momentum. 5-1, all the triggers are the same color. That's nice. You took the trade after confirmation, not from an area inside of favorable large triggers. And it looks like you got in somewhere up here, right at the very beginning. So you took what's called a momentum style trade, Indu. It's nicely executed. Not a high probability trend trade, but a great opportunity using momentum and termination conditions to identify an area. Safia, let's see what you did. This is anything can happen area. It's a termination condition, not my trade. Safia, give yourself a high five. What a great chart read, right? Sometimes it's not a trade. I love this because what did Safia just do? She identified the trigger line strength and she was able to recognize that she had given away the advantage of momentum. She recognized the termination condition and she was able to recognize that she was giving away the advantage of a clear path. And then Safia said, you know what? Without momentum and a clear path here, I got you. I will not leave you hanging. Without the advantage of momentum and a clear path, she said, well, that's not my trade. How did she know that wasn't her trade? Because Safia has a set of rules for what it's going to take to get her into the market. Great job. I love seeing those pictures. 90% of what we do is reading our indicators, right? 90% of what we do is waiting for advantages. Guys, you have to be able to write it out. You have to be able to identify what your trade is. I'm going to give you this after I talk about it. So this is your homework this weekend. Everybody's saying, well, you know, I was going to go out and barbecue. No, you're not. You're going to write a plan. And it's going to take you 2 minutes because I'm going to give you the plan. I just want you to tell yourself you're going to commit to it. And this is an example of how to write your plan. And guys, your plan is going to grow and progress as you grow and progress. This is the absolute remedial, most simple way to get moving forward with confidence with Nexgen. So Sam, this is the beginning of your answer. I want you to use the phrase, my trade is, personalize it, make it yours. There is no, do we take a trade? Do we enter here? It's do I enter here? Is this my trade? There is absolutely nobody, unless maybe you're on a wife-husband duo. This is your trade. It has to come from your brain. I don't care what anyone else does. I'm only concerned if my rules are met. Guys, my trade is the high probability trend trade because I'm brand new, because I'm learning to read my indicators. And to enter this trade, I must have the conditions of this checklist met because I know that it provides a statistical advantage. Guys, you just wrote a plan for entries. You just wrote a plan for getting into the market. And remember that great entries create easy management. And then here's the part that people love to not do. I want you to take pictures of your perfect entry, guys. I want you to study. I want you to go back and circle those tails and line them up. I want you to steal pictures from this class. Every time somebody posts and I say something clever like, hey, Safia, what a great rules-based trade. This is a high probability trend trade. I could teach a class with this one. I want everybody in this room stealing Safia's trade. I want you taking her picture and making it yours. I want you saying, you know what? That's the best of the best. Look, even if it's not mine, I'm going to take that trade. I want you to grab them from the manual. I want you to steal pictures from the manual. I want you to go to Discord. I want you to steal pictures from Discord. And I want you to go to your spreadsheet, and I want you to fill this section. Guys, before we went to just 2 charts, I had over 300 pictures of high probability trend trades on a 3-chart setup. I've got about, 95 here, because I don't steal them from class like I used to. When I started trading, I ignored taking pictures, I ignored asking for feedback, and I ignored using the spreadsheet, guys. And this is the path to confident trading. This is the path to trust. Get yourself in the habit now of taking pictures, as many as you can. Set a goal for yourself. 10 pictures a day. That's easy, right? 10 pictures a day is 50 pictures a week. Have you ever seen the same picture of something 50 times and not remembered the details? What about after 200 a month? What about 2,400 pictures in a year? And guys, this is on the low end. I had taken 10 pictures before we started class. I'd probably taken 15 pictures before we started class. There's a reason I'm comfortable with these patterns, because I do the study. If you really want to be a day trader, guys, take a lot of pictures. The patterns repeat themselves. Annotate the charts. Tell yourself what you see, right? Tell yourself why you took the trade. Tell yourself that you followed rules. Celebrate it. If you lose the trade, go back and police yourself. Did I follow my rules? And the most important thing is ask for help. Safia said, and I'm going to keep going back because she's posting and doing great. Safia said that this is a trade that she was losing. Trading right into termination conditions, right? Kept trading into that termination condition. And then Safia asked for help. She said, man, something's not right. Will you look at my charts? And we did. And it took about 8 seconds to identify the challenge and the fix. So great job. Guys, take advantage of having me here. I love the educational process. I love giving you guys what you need. But you have to annotate your charts, right? You have to tell me what you see in order for me to tell you if you're seeing it right. Thank you, Ziba. I'm just regurgitating information. You guys will be great. So Sam, Elvis, you are definitely getting there. There's no doubt in my mind. And guys, that's a kick for me. When I watch people progress, I love it. It makes me so happy. All right, Sam, let's give you the Sunday school answer. Are you ready? Let me figure out where my internet is. Here we go. So straight from, you guessed it, the manual. What's the path, guys? I say it every morning. I post this picture every morning. Nobody ever believes me. The step-by-step path, Sam, to becoming a confident trader is you posting in class every chance you get. I'm still waiting for a whole lot of pictures from you, right? Posting in class every day. Mark, this is what I see. Mark, this is what I was thinking. Mark, this is what I was feeling. Am I seeing this right? Am I thinking correctly? I won't tell you how to feel. I've been married too long. I know that's a bad idea. Posting your trades in class and getting feedback. Finding those little fixes to get you where you want to be. And then use that spreadsheet. Every time you see something that's correct, annotate it, put it in the spreadsheet. Every time you see something that's not correct, annotate it, put it in the spreadsheet. Every time you take the trade, put it in the spreadsheet. Okay, so that's the generalization, Sam. If you're not doing this yet, you're not on your way yet, okay? Commit to the process. Learn the trigger line and Fibonacci rules for when it's okay to trade. Learn the Fibonacci lines. Learn the rules, right? Here you go. There's the rules for when it's okay to trade. Simulate your trades daily. Guys, simulator is monopoly money. Simulator takes all the stress and worry out of trading because there is no financial risk. You're in a learning process. It's like using a cadaver in the medical field. It's like using an old junker if you're learning to be a mechanic. Something that if you break it, it's okay. Nobody gets hurt. Simulate your trades daily. Post your pictures in class. Sam, here's the kicker. Until you have the correct rules. Until the trades that you're taking every day fit the rules that you put for yourself in the plan. Every trade you take should be the correct trade. Doesn't have to be a winner, but it should be the correct rules. Don't practice the wrong trades. Just because it's simulator, you're creating muscle memory. Simplify your plan. Guys, you have one plan for your first 30 days. High probability, learning to read your indicators. What looks are you going to commit to are right there on that checklist. You have to learn these looks so they're easy. Guys, we've already determined they're not easy in the beginning, right? It takes a minute. It takes some study. It takes repetition. They become easy, I promise. But you have to put the effort in. After class, before the next day, download replay data. Go back and retrade the day. Fix your mistakes. Take the trades that you skip the trades that you shouldn't have taken. Work on your management plan. But get those repetitions in. Take pictures of the correct trades. Guys, if you market replay on Wednesday afternoon, Thursday morning, I want to see 10 pictures from you of everything that you did on market replay so we can talk about it. And repeat this process every day until you always take the correct trades. I'm going to put this in caps in the room. Until you always take the correct trades. What are the correct trades? The correct trades mean that your rules were met, right? And then Sam, are you ready? If you're always taking the correct trades, Sam, if you take 100 of the correct trades, how many of those trades, statistically, are you probably going to win? 70. So Sam, if you win 70 out of 100 trades, and you manage those, and let's just do this, that your winners are bigger than your losers, haven't you guaranteed yourself that you can win? And then it's time to trade blind money. And guys, this is the path. We all get so eager to cross that finish line, to be professional day traders. We're all so eager to put our hard-earned money into something that we don't understand. So much so, I've watched people lose hundreds of thousands of dollars. Saying ridiculous things like, well, if it's not real money, then I'm just not going to do it. Well, you're an absolute fool. I don't give trading advice. Embrace the education, guys. Simulators are amazing. Keep practicing. I simulate all the time. If I'm sleepy, I simulate instead of go live. If I just wake up, I'm on simulator. If I'm unsure about a management scenario, I'm unsure, I'm practicing, Elvis, 100% winners. Beautiful. Nice job. If I'm unsure of something, I'm on simulator. If I'm practicing a new concept, I'm on simulator. That's not so bad, is it, Sam? Gary, no momentum, but you're through. No momentum. Reversal bars. Why give up the advantage of momentum? I say it all the time. Nobody ever believes me. Why give up the advantage of momentum? Especially if you're not making more money than you can spend already. Why give up the advantage of a clear path? You can if you want. It's your trading. I love advantages. Gary, doesn't matter what happens after, right? It's Friday. I'm going to swear a little bit. You know what this is? And not picking on Gary here. This is the I didn't have the advantage of momentum. Nothing said this market was likely to continue. Even got a reversal bar from right here. This is the market saying, hey, Gary, break your rules, man. It's cool. It's probably going to bounce 90% of the time. But I'm going to show you this one, and you're going to feel bad about it. And guys, when you take this picture, all you're telling yourself is that somewhere you screwed up, and you didn't. You followed your rules. Doesn't matter what happens after your rules are met. Doesn't matter what happens after they're not. All right, X-Romance, odds favorable momentum, no termination conditions. Pull back to the area inside of favorable large triggers, right? Because it went against you, you moved your stop to take profit above your entry. Was there any reason to wait to enter at the divergence? Well, you covered up what was happening, but X-Romance, odds favorable, no termination conditions. You had one slowdown. It pulls right back to the mid-band. Look at your large triggers. Your window goes from 75 up to here. Stop stays where the market shouldn't go. And then at that point, there wasn't much reason to get out. If you want to show me what happened on the 5-1 right here, I bet there was probably a pivot stop out, a second divergence, small triggers below the large. Smaller chart telling you that the large chart may be changing. Does that sound about right? Does that make sense? When everything says go here, take the trade. But remember, stops go below. 81 becomes your first trouble spot. It's a good looking trade. I don't know if that answered your question or not. Any reason to enter? You're kind of splitting the difference. One loss of momentum means that it may push a little bit lower, right? But with this much momentum, I'm not willing to miss it. I might put an entry here, maybe put an entry there, but I have to be mentally ready that it may push to the bottom of that window, to the bottom of those large triggers. These triggers are just the large triggers on your 13-2. That's it. When these are one on top of the other, it gives a smaller window of opportunity, right? Were you here for the entry talks today? I got some pictures. Check this out. So X-Romance, when your triggers are one on top of the other, right? Synthetic and large, overlapped, heading in the direction. Do you see how your window, that highest point of support to the lowest point of support, it's really small, it's tight, it's concise. It gives you a small area where the market is likely to continue. If these triggers are spread out, not one on top of the other, and they create this big wall right here, well, it may pull back to the synthetics. It may pull back to the large. It may pull back to these one-to-ones in the synthetic. It might go from the mid-band and the large. Your window of opportunity becomes pretty big, but we'll still use them to define where that window ends, right? And that window ends below those large triggers outside of that area. Does that help a little bit? I love large and synthetic right on top of each other. Zeba, do you have your picture software? Zeba, there's your highest point of support, right? Those one-to-ones are still inside of the trigger lines, right? Feeling pretty good about it? How does that feel for the window? Not even. So, X-Romance, get in at the area where the market's likely to continue, right? You know that it may go below the window. If it does, you don't want to be in it. But once that reversal bar prints, you can reduce your risk. Makes it easier to keep that trade on. Does that make sense? And if you buy 12 ticks above the window, what if 12 ticks above the window isn't in an area? Are you willing to break rules based on an arbitrary number? And it's that consistency. Because Zeba, it doesn't have to touch the top of the green trigger. It has to be inside, so it actually has to be below the top in some fashion. So Zeba, remember, we identify where the large triggers are, and then your window are the areas inside of the large triggers. And it's those areas where the market is most likely to continue. You thought the red, no, the red is just the triggers. So identify from the top to the bottom, and then if I pull that box down to the highest point of support, and I pull it up to the lowest point of support, there's my window. I like that little drill, guys. That's a good one to get in the habit of. When you're identifying windows of opportunity, we'll say right here, not that this was a trade, identify the top of the triggers and the bottom of the triggers, and this definitely wasn't a trade. Scooch the bottom to the lowest point of resistance. Scooch the top to the highest point of resistance, whoops, without moving the bottom. And you've defined your window. So start with the triggers and then go to the areas inside. New trader. Hey, Mark, is this an entry? Let's look at rules. I love that question. Hey, Mark, is this an entry? It's my favorite question. Let's take a look. New trader, are you with me? Am I coming from a termination that creates a full reversal? I like that. Do I have odds favorable momentum? I love that. No termination conditions. Well, the smalls are below with odds favorable momentum, the large are above. This is an area with the potential to break, but it hasn't broken yet. So it's a 50-50. I can call it a yes. And then all of that information is done on the 13.2, right? So we blow up the 5-1. New trader. We're going to use the same little thing that we did there. Here's the bottom of my triggers at the time of the reversal bar. Here's the top of my triggers at the time of the reversal bar, okay? Here's my highest point of resistance, and I'm kind of right there at that lowest point of resistance, right at the mid-band. So new trader, did we get a pullback to an area inside of favorable large triggers? I'm afraid we didn't. Which means that while the conditions were absolutely perfect for a trend trade, those sons of guns didn't pull back for us. So new trader, great read. I love the conditions over here, giving you all of those advantages. And those sneaky little people didn't give you a rules-based entry. Not for a high probability trend trade. Does that make sense? Isn't it cool how you can just take those rules and you can always go back? Hey, Mark, was this an entry? I don't know. Were the rules met? Termination condition. Isn't that cool? You guys knew where this was going to happen. It'd been there for 20 minutes. Price reaches an area. None of the trigger lines go through. Absolutely textbook. Price reaches resistance. Absolutely none of the trigger lines go through. Absolutely textbook. We haven't talked about this one yet today. All right, guys, this is for bonus points going into the weekend. Do you guys remember this look? When price accelerates away from those large triggers super fast right into a Fibonacci area, and those large triggers stay below, that's the gap theory, absolutely. What is a typical scenario when price accelerates that far, when the large triggers don't follow? A lot of times, price likes to snap back to those large triggers, doesn't it? And what does that tell us? It tells us that trying to go long, split triggers, right? It tells us that trying to go long right here is probably going to lose more than it wins, because it acts as like this vacuum sucking price right back to those large triggers. And it's not guaranteed to happen, is it? Notice how one set, synthetics are all the way down here. The large triggers are all the way up here. It might go, but I'm giving away a lot of advantages, guys. I'm ignoring a lot of information that my trigger lines are giving me. And look, there it goes, fulfilling expectations created through pattern recognition. Yeah, so guys, Monday's a holiday. Mondays is President's Room. President's Day. I believe the market's going to stop trading around noon. But I'll tell you what, guys, I'm going to be here in full force. We may not get a lot of live market chart reading in, but we'll go through rules. We'll talk about patterns. We'll talk about entries. We'll talk about exits. I don't know, maybe we'll fire up Market Replay and go back and do that study. Isn't that amazing? I knew that price was more than most likely going to try to close the gap back to that trigger. And let's even do it like this. How many trigger lines are above this blue Fibonacci line? How many triggers broke through? Not a one. Not a one. Not a one. Who wants to take a shot at a long trade with flat triggers and 3 termination conditions? How many advantages are you willing to give away? I'm not willing to give that many away, guys. Sam will do it. So guys, your homework is going to be to do a little study. Show of hands. Does everybody have their software? Everybody has it, right? Cool. This is what I want you to do this weekend. Let's do it for today. Ziba, you need to have it. We have a date tomorrow. This is what I want you to do. I want you to go back, and every time you see odds favorable momentum, I'm going to show you a trick. Right click, okay, and go to templates. And load a template. And guys, you have this. I want you to load 2 triggers only. Let me see if I can take a picture. No, it's not going to let me. Load 2 triggers only. So Ziba, what I want you to do right now is I want you to get with Jason and Tech. I'm just going to flap my gums for the next 30 minutes. I want you to go over to Discord, Ziba. What is that? And I want you to go down to tech support, and I want you to say, hey, Jason, can you help me? And Jason's going to say, Ziba, absolutely I will. And he'll have you right where you need to be. Guys, we have the absolute best tech department in the world. I'm going to click OK. You guys see how we have nothing but triggers up here? Claire, let's see what you did. Claire said everything's going down. She's defining her windows of opportunity. I love it. Woo, woo, woo. That's kind of fun. Entry at the first area gets stopped out because we're right into a termination. It gives a little bit of a bounce. You take the next one. You're able to make money. Everything's going down. I like the woos. That's John Novak. He said the woos, and it made me laugh so much that I figured. Nice job, Claire. Great chart reading. All right, guys, give me a Y. All right, Ziba. From the Nexgen, go to the contact page. There is Jason's phone number. There is Jason's email. There is Jason's Skype. I recommend that you make his phone ring. Guys, people should never use email for anything pressing. But you should be able to text tech support. So this is what you do. Let me show you how. I'm going to click on tech support, okay? And I'm going to click create ticket right here. And when I click create ticket, it's going to go straight to Jason. Cool. Then you just have to be patient for a second. He'll get back with you. No worries. Sorry, now I'm texting him real quick to say disregard my ticket because I don't want him to waste time with me, not when you guys need him. Sorry, 1 second, guys. There we go. All right, where was I? Your homework. I want you to do this. I want you to get your trigger lines. I want you to look for odds favorable momentum. Can everybody do this? Every time you see a tail, I want you to circle it. Not odds favorable, we're not circling the tails. I want you to scroll back. There's a tail with odds favorable. Give me a Y if you're with me. Sam, can you do it? D, can you do it? Odds favorable. There's a tail. And I want you to go back the whole 10 days, guys. What are we doing? We're teaching ourselves to identify the advantage of momentum. Pretty easy, right? You know what else you're doing? You're teaching yourself that advantage, those potential entries don't happen every 18 seconds like you wish they would. Sometimes it takes 30 minutes until the next one, right? Sometimes the market goes sideways and doesn't give you a darn thing to do. And sometimes it's absolutely beautiful. So what I want you to do is I want you to do this, guys. This is your odds favorable momentum drill. It's really simple. It's very easy. Oh my gosh, Safia, I can't read it in here the way it does. Can you email it to me? Or give it to me in a Word document. What happens, guys, is, no, it's okay. My brain goes sideways. But I can tell you right now, Safia, are you ready? You're making it too complicated. It's way too many words. It's way too many words. So look at wide synthetic triggers and large triggers for area. That's not your first one, is it, Safia? What's your first one? How about if we just do this? Let's write it together, guys. This is how plans are built. How about that? Safia, strong triggers. Isn't that easier? And then instead of saying look for no divergences, look for fibs, red, blue, 1-to-1s. How about if we write no termination conditions, right? There's a little bit of assumptive there. There's a little assumption that you know what strong triggers are. Well, this drill is going to make sure that you're great at them. There's an assumption that you know what no termination conditions are, right? We can put a template back on and practice termination conditions. So we just practiced odds favorable momentum. After we have odds favorable momentum, come on, charts. Oh, that was for the 5-1 entry? Okay, so you have look for no divergences. Okay, I'm with you now. This is why these always confuse me. Look for no divergences. What if you have one divergence, Safia? Is that okay? What if you have two, but they're strong triggers? Is that okay? See how that works? So what if we do this? Whoops. That was 9:45. I'm going to scroll back. Keep it simple. So if we're talking about entries, no, I know you are. You're giving it too many things to think about. What if you say, use a limit order to buy or sell an area inside of favorable large triggers. And then, Safia, just for grins, what if, I love this. This is fun for me. I hope you guys realize that. What if you just scroll back and circle those three little things? Do you have odds favorable momentum? Absolutely. No termination conditions? Absolutely. And then, Safia, as you work on the entries, absolutely, Sam. So when you've identified your odds favorable momentum, you're going to go back to every circle, right? Was there a termination condition present here? What about them? Sorry, D, that was snarky. So D, we have to ask ourselves, how do we determine a termination condition? Price has to reach an area, right? Did price reach the one-to-ones? So D, this isn't a termination condition. We're approaching it, right? They haven't. Let me show you the bottom of your bar here. And guys, this is a good one. D, you just opened up the perfect can of worms. See how it hasn't reached it yet? That's the first part in identifying a termination condition. Price reaches an area. That's the bar that reaches an area. Do you see the difference? And I'm going to take this one step further as well. So there's the same picture. Price hasn't reached yet. And D, you're probably saying, because you're like I was, right? It is. It will in the beginning, won't it? You ever seen that interview with Tom Brady where he said everything seems like it moves in slow motion at this point in his career? It's because he has the repetitions. You will too. So what a lot of people mistakenly think is, oh my gosh, I don't have any room to get to that termination condition, right? Guys, there's no room to get to those one-to-ones unless we're selling a pullback. We're selling a pullback, in which case there's tons of room to get to those one-to-ones. D, it'll slow down for you. But if you go through and you do this drill, circle odds favorable momentum so you burn it into your head. Identify termination conditions so you just burn them into your brain. Do the circle, and then Safia, do you see how doing the circle when the rules are met, it kind of focuses your attention a little bit? And then all you have to do is ask yourself, was this an area of resistance inside of favorable large triggers? And it was. So guys, your homework this weekend. Okay, so here's this one. I don't know why I have that. Let's see if I can get back to my pointer. All right. So did we have odds favorable momentum, everybody? You're going to study this weekend. We did, new trader. Smalls above the large are wide. They're angled in the direction of the trend. So now what I know is that you need work on identifying this best of the best look, right? Smalls outside of the large are wide. This is odds favorable momentum. New trader, this is not. This is anything can happen triggers. Odds favorable, anything can happen. Odds favorable, anything can happen. Remember, we're eating an elephant, right? The first bite to eating an elephant is identifying odds favorable momentum, recognizing that momentum and understanding the advantage it gives. So then we go into, I've got my circle. All right, D, Sam, Zeba, everybody. Did price reach an area? Is there a fib? Are there one-to-ones? No, right? So rule number 2 is met? Cool. So I'm going to leave that circle. All I'm using is a 13-2 chart. I'm going to leave the circle. We already established no area met or reached. I'm going to leave the circle. Guys, if you want, take a different drawing tool. When you have a beautiful termination condition, it's all right. Identify them. Remind yourself. Take a picture. I'm with you, Sam. So where was our next circle? Smalls above the large are wide. They're angled in the direction of the trend. We've already identified the momentum. And this is a tricky one because it's right at the fib update. I want you to pretend this fib isn't there. If the fib isn't there, no termination condition, right? Guys, this happened right when your fib's updated. So at the time, that fib looks like it was reached. So price reaches resistance, trigger lines remain below. Is rule number 2 met? I've reached an area that my trigger lines haven't been able to break. Rule number 2 says that I have to have a clear path. Do I have a clear path? No. So watch this. For the sake of study, I'm getting rid of that circle because my rules aren't met. So I don't care what the entry looks like. Does that make sense? So we scroll back. Guys, you're going to do this. Odds favorable, right? Smalls below the large are wide. They're angled in the direction of the trend. Has price reached an area likely to stop the market? Work with me, new users. Do you see odds favorable? And if you're confused, this is where we talk. Have we reached an area that the trigger lines haven't broken through like we did here? No, right? So are rules 1 and 2 met? Yes? Let's circle the tail. Do you see how we're studying? All we're worried about right now is rules 1 and 2 because, guys, those are the easy ones. All right, so here we go. Are the small triggers below the large triggers? Right here. Do I have odds favorable momentum? Yes. Have I reached an area that none of the trigger lines have broken through? Yes. So am I going to circle this tail? Hell no. Rules not met. Do you guys see what we're doing here? Do you see how easy it can be to recognize rules 1 and 2 if you just allow yourself to keep it simple? Are the smalls below the large? Yes. Have we reached the area? No. Can I circle that tail, new trader? What about this tail? Can I circle it? Guys, do you think if you spend 30 minutes with a cup of coffee, cat in your lap, going through this drill, is it going to increase your awareness through repetition? Is it going to start to kind of solidify what it needs to look like after the fact? I think it will. And then watch this. Scroll back. There's one. So guys, we kept the circle, the rules were met. The entry, was it inside of favorable large triggers? Is that where this trade bounced? At an area of resistance inside of favorable large triggers? Do you see it? Yes? So guys, here's the part. I want you to click capture and I want you to take a picture, okay? Can you guys all take a picture? If you can't, you better tell me now. And I want you to annotate. And I want you to put strong triggers. I want you to reinforce the lesson. Rule 1 met, okay? And I want you to put no termination condition. Rules 2 met. And then guys, I want you to reinforce that great lesson. Entry is at resistance inside of favorable large triggers. And I want you to ask yourself, could I have made $200 on this trade? Damn right I could have. If you go back 10 days, all right, so we have this picture. We have our annotations. I want you to click share. I want you to get that screencast link. If you're on Capture, I want you to hit share, and I want you to get that screencast link. And I want you to come to class, and I want you to post and say, hey, Mark, this was my take on this look. Did I get it right? And I want you to go to your spreadsheet, and I want you to paste that screencast address in there. Click insert and link, and guys, all of this is in the user guide. Turn it into a hyperlink. Put the link in there like you're going to Google, and I want you to put high probability, trend trade, short. And I want you to start studying. And I want you guys to bring me, collectively, at least 50 pictures. Let's fill up this spreadsheet. When I hit 200 pictures of perfect high probability trend trades, I'll upload it to the website, and you guys will have all 200 pictures yourself. We'll do this together. We'll study together. So here's my next circle. Did I have an area for entry? Whoops, where's the circle? 10:03. I missed it somewhere. Oh, because it was after the short. Guys, did I have an area of support inside of favorable large triggers? Absolutely I did, didn't I? This one went from the top of the window, didn't it? Is it a rules met trade? Absolutely. Take the picture. Get it into your spreadsheet. Guys, this is a rules-based entry. When this third divergence prints, we know from our termination conditions, right? When that third divergence prints on my smaller, faster chart, I know that it may end the trend. So now what have I done? Now I've identified a beautiful entry, and I've identified that the market may push back, which creates a management opportunity. Is everybody with me on this? And guys, there's two things that are going to happen when you leave this room today. You're going to make a decision. You're going to say to yourself, you know what? That sounds like a lot of freaking work. I'm not going to do it. I'm so smart, I'll watch a video and I'll become a professional day trader. I'll be live by the end of the week. Or you're going to say to yourself, you know what? This guy's probably already made these mistakes and learned how to grow from them. And he's presenting a path that gives me the best chance of success in this thing that I told him that I wanted to do. And you're going to go back and you're going to start this study process in a stagnant, after the fact market. And you're going to create this awareness. And you're going to come into next week absolutely blown away at your ability to read your indicators. And you're going to make mistakes this weekend, right? And you're going to do it wrong a couple times. And that's why I'm asking you to post your pictures in class when we have class, so that we can talk about what you see, so we can talk about what you're doing. And then guys, I just got the message from John Novak that there will not be class on Monday because there won't be a live market, because there won't be trading, because it's a holiday. So I want you to do this. I want you to study, and Monday I want you to use market replay and go back and maybe retrade today or Thursday or Wednesday. Take your pictures, and then when we come in on Tuesday, we're going to be full blown, right? So you guys know how to study in a market that isn't moving. I want everybody to watch this video. And I want you to set up market replay this weekend. And I want you to go back and trade the market as though it were live. I want you to simulate. And I want you to take every trade that you think you see. If you have an inkling of a hint that it's a trade, I want you to take it and take a picture of it. And I want you to write your rules on the chart, and I want you to bring it back to class. And we're going to see how all of that circling helps us out. Does that sound like a good plan, guys? It's a little bit of work, right? X-Romance, you're asking, is this a trade? X-Romance, write your rules on the chart. Guys, I ask this every day, right? Every day I plead and beg. Do me a favor. Write your rules on the chart so I know what you're doing. Put your checklist on the chart so I know what you're doing. Does it have odds favorable momentum? It does. Does it have a termination condition? It does. It's not a high probability trend trade, is it? Can't be. I know that because rule number 2 says I will not trade into an area that has been reached and the trigger lines have not broken through. So is this a trade? Might be a trade for you, X-Romance. It's not for me. Do you have a clear set of rules that get you into a trade? Guys, if you're asking me if it's a trade, you probably don't, right? And if you don't have a clear set of rules, doesn't it make sense to use some rules that have already been put in place? Doesn't it make sense to give yourself something specific to focus on? And you'll never have to ask me again, is it a trade? You can say, Mark, my rule number 2 says don't trade into a termination condition. Am I seeing this right? It looks like a termination condition. Mark, my rule number 3 says that my entries come from an area inside of favorable large triggers. So X-Romance, there's your areas inside of favorable large triggers. And price never pulled back to them. So if I go through the process, well, I didn't have a clear path, and I didn't get a pullback to an area inside of favorable large triggers. So for all intents and purposes, it wasn't a trade. The window was beautiful. Price never got to it. Do you see that? The window was amazing. Price never got to it. Cool. So X-Romance, this is one of the greatest pictures you could have posted. And what a great way to finish the day. I appreciate that. Or at least get close to finishing the day. Get in the habit of policing yourself. Give yourself that checklist. Put it on, like literally print it out. Put it on the desk in front of you. Get in the habit of answering these questions yourself, of writing these rules on the chart yourself. Because I'm telling you, you can't write termination condition too many times. And remember, after the fact, doesn't that look amazing? After the fact, you're like, oh, I should have taken that trade. But in the moment, you didn't know if that area was going to break or not. It's easy to be brilliant after the fact. And guys, that's why when we do this, we make sure that the rules are met rather than just looking for entries, looking for the ones that won. Smalls are through the area, right? The large are not. I have odds favorable. This area has the potential to break, but it hasn't broken. In the moment, this is the top of my triggers. This is the bottom of my triggers. Is everybody with me? We're going through it right now. Where's my highest point of support? Mid-band and 1-to-1s. Where's my lowest point of support? Fibonacci support. Guys, I've just identified in about 6 seconds that if these areas are going to break with this momentum, that's where it's most likely to happen. It's not guaranteed to happen. It's not a high probability trend trade because these areas haven't broken yet. They have the potential to break with all that momentum, but they haven't broken yet. But if I have a trading plan that says with that much momentum, I'm willing to take it. The good ones. Awesome. David, great job today. Great questions today. I appreciate you. You guys got low ticked? Gary, let's see what you had. 50-50, no divergence. Pulls right back to that lower end of support, right? Happens sometimes. Bummer. Area with the potential to break, not guaranteed to break. Paul, same thing? Same thing. What was that, crude? So let's go to crude real quick. 50-50, right? Pulls all the way back. Your small triggers have turned up, and they're coming up. Everything's green, right? Oh, no worries, David. Thank you for asking the questions. That's why this class works, is participation. So Paul and Gary, now you're in kind of a weird spot, right? Support's likely to hold based on termination conditions. Resistance is likely to hold based on termination conditions. Smalls are below the large, but the large are up, but divergence is printed. Guys, do you feel like you have a clear path right now? Ron, enjoy your walk on the beach. I'm jealous. My wife and I were talking last night about, all right, where's someplace sunny we can go? We may end up in Florida for a little bit. But do you see how that was a good shot, guys? That was a 50-50, no divergence, little window of opportunity. I love it. It happens. 74 is beautiful. We're 35 and cloudy. Yay. That's all right, though. Today's a great day. After class, I go pick up my sister-in-law from the airport, and this afternoon I'm getting LASIK. So hopefully I'll be able to see everything a little bit better on Monday. And now we're just kind of right in that little, let's wait and see what it does. Pretty cool, right? It's just chart reading. Everything's chart reading. So I want you guys working on that this weekend. I want you to take time, and I want you to go back and circle tails, and I want you to go back and identify those termination conditions. And every time that circle lines up with an area inside of favorable large triggers, I want you to take a picture and I want you to get it into that spreadsheet. Can you do that? New users, are you motivated enough in the first week to do a little homework? I hope so. If you're with me and you've been with Nexgen for a while and you're not making money consistently, doesn't it make sense that learning that best of the best look might give you an advantage? And guys, this is why we say it has the potential to break. We have odds favorable momentum, but it hasn't broken yet. Down here, we had odds favorable, no termination conditions. Some of you took the short, but I've got 3 divergences in the same general price range and small triggers inside of the large. It said that we were losing momentum. And now I've got smalls below the area and the large are above. And I'm looking at resistance in a mid band, but my large triggers are way up here. Indu, you're welcome. I can identify before anything happens where the areas are, right? But what do we want to have happen? I want a collision course between price, and I want these areas inside of favorable large triggers to give me the best advantage. It may happen, it may not. Oh, but look at those triggers coming down. How does that make you feel? What do you guys think? Does that make sense? Do you see how quickly that happens when you start to go through the repetitions? Do you see how quickly that analysis falls into place? It takes no time at all. Sam, don't worry about the dollars. Focus on the process. I don't give trading advice, but I can tell you that nobody ever got eagles with shitty mechanics. Focus on the process. Focus on the advantages. Focus on the window. Focus on doing this right. And if you're doing this right, the money's going to chase you, right? Guys, this is what we call a pre-trade picture. Odds favorable, no termination. I still haven't gotten a reversal bar. But I know right where it belongs. I know right where that order belongs if I do, don't I? Do you see how that works? I haven't even gotten a reversal bar, and I know right where my area of resistance inside of favorable large triggers is. I don't have a tail over here because I don't trade tails. I don't know where the tail is likely to form. But what I do know is where that market is most likely to continue, right? Sophia, tails happen after the fact. If you try to trade tails, that trade is long gone. Does that make sense? What's happening right now on this bar? If the price comes up beyond the halfway point and then goes back down, well, then we'll have a tail to the downside. If price goes up all the way to this reversal bar marker, well, then I'll have a tail coming from the downside. Does that make sense? Pretty cool, right? I don't trade live in front of you guys. That's not my job. My job is to teach you about rules. Well then, Paul, you paid extra. Show me a picture. I mean, your stop still goes outside of the large triggers, right? They're trending one on top of the other. They can't be that huge. I guess maybe it can be. If you have a huge window, you have to make a decision, right? I don't have that huge window. Guys, I'm going to rebuild this weekend too. I wouldn't have been entered in this trade because it didn't hit me, right? So I have two choices. Are my rules still met? Do I still have odds favorable? Do I still have no termination conditions? Do I still have an area inside of favorable large triggers? Well, then I'm not going to let that down bar worry me, right? I am going to insist 100% that if I'm going to enter a trade, I'm going to enter it from an area inside of favorable large triggers. And that's my only option because I'm a rules-based trader. That first down bar, my rules weren't met. How much would it suck to get in down here because you think it's going without you, and then it pulls right back to the window? That would be frustrating, wouldn't it? Paul, you're still, yeah, it's a little bigger, huh? But your stop still has to go outside of the window. Same exact place that mine would have had to gone, right? I don't chase trades, guys. I have a methodology that's been proven to win more than it loses. I have a methodology with very concise rules. And if this trade goes without me, then it's simply not my trade. It's not my money. And guys, that's going to wrap up the week. Paul. Did you guys learn anything this week? Does anyone feel a little bit closer? Are my small triggers still outside of my large? Have I still not reached a termination condition? Hey, Paul, if I get a second divergence, is there a pivot that it's likely to take out? Is there an area just beyond that pivot still in the window? So guys, thank you for being here. Thank you for your questions. New trader, you're going to be observing for a while. And new trader, I want to say welcome to the family. I see that the color next to your name has changed. You see it, you know it works, you know you have to practice it. And so we're going to work on that every day to get you where you want to be. Guys, thank you for being here and thank you for the participation. Can you imagine how great this class will be every day if you guys keep bringing these amazing questions? What clarity. I appreciate it and I appreciate you guys. Enjoy your weekend. I will see you next week. Monday is a holiday. Monday, the markets aren't doing what they do. So John Novak has told me that I'm not going to be here doing what I do. Use Market Replay. Take some pictures. Post them in the room. Maybe I'll show up. Maybe I'll go play golf. I don't know. I'll see you guys next week. Take care, everybody.